Time for the Tesla and the Palantir weekly update, and I'm going to start with this chart that I shared on X just a little while ago. And I want to just point out the fact that this used to be a really good support level. And in hindsight, it's obvious, right? It's obvious that right here was a support. It backtested that, right? It just backtested support over and over again. And that's kind of what I see happening right now. So I said this will be obvious in hindsight in a few months. So basically, what I'm seeing is this low that was hit today was basically an important level, like right here, right here, right here, over here as well, right? It was a very important level. Could it come down and wick below it? Yeah, of course it could, right? It could probably come down to like these levels too, maybe even like 210 or so. Like based on today's price action, things could go a little bit lower, right? I wasn't expecting that to happen, but it is what it is. But it doesn't change the fact of the matter that this is actually still more and more bullish over time. And we can see that from this bottom in April 2024, it built a base and went higher, backtested that base that it built, and then went higher. And now it backtested this previous base that used to exist, and it can probably just stay there for some time until it's ready to go higher as well. So for people that are wondering or worried that it's just going to crash now, go straight back to 180, I see a really solid confluence of support levels in this zone. And in this video, I'm going to talk about them all. So in this video, I'm going to first talk about the obvious Fibonacci level that we saw today. So from the all-time high down to that January 2023 low, we can see that price did in fact close back below the 382, and I wanted to see a weekly close above it to give better confirmation that yeah, maybe price does want to rebound quicker and go higher, but maybe not. Maybe price just wants to continue shaking out the weak hands and building that base on that level that I showed you around that 214, 213 in that zone and go higher. So what do we see for the confluence with the Ichimoku when we put that on? Well, we see that it did backtest basically the cloud. And actually, where does the cloud lead to next week? Well, it is a little bit lower. Like right here, the cloud was a little bit above that 382 level. But now next week, the cloud is exactly maybe 219, 219.16. So this kind of means that it's giving a little bit more room to actually try to get back above that cloud for next week, right? Right now, to get back above the cloud this week, it would have had to close back above like 223 or something. But to get back above the cloud next week, it's only around 219. So it's giving a little bit more leeway to get back above the cloud in the weeks to come, which is a good thing where it could try to build a base on top of, which is close enough to that 221. So is it really necessary to go back down, or is it really necessary to close above that 221? No, it's not that necessary because you can see in the past it's kind of done it before. Like right here, it closed below, then it came back above, right? It's always just a zone. It's not really an exact number. But I do like how this is developing because what I just mentioned, it's a breakout. It got rejected by resistance here, and then it came back down to backtest support. This is a healthy breakout and a backtest to try to continue higher. So these levels are kind of important to hold. And another thing I want to show you is I'm going to take off that Ichimoku now and just put on the SMAs and right here. And we can see that it did also cut through the 200-week moving average. And I was saying I wanted to see that as hold as support, but obviously after hours and pre-market, it did not. It just sliced right through. So that just cut through all those stop losses and ate up everything on the way down. Now, will price go back down to the 207, 206, whatever? Would it do that? Well, at this point, I'm not going to rule it out anymore because with Tesla, anything is possible when it comes to volatility. But if it did happen, would I be scared? Not really, because it still would be just a breakout and a backtest of those averages. And now, like I mentioned before, they are upward sloping. So with that said, I'm going to also put on the monthly chart here. And It also sliced through the 50-month moving average at 235.25, which was basically the same level as the 236 of the 200-week moving average. But what I want to really show here is that Ichimoku put back on the monthly chart. And what sits right below it? Well, they have the 213. Remember, I was talking about 213 for a long time before, and that is another major support level. You can see once it broke out into the cloud, every single monthly candle has so far closed within the cloud. So I still think that 213 has a very strong possibility of holding for 4 consecutive months in a row. And so we're going to be watching that level closely, but what sits right below it? Well, that's right. It's the 207 and the 205 zone. That's the same as where those weekly moving averages were that I just showed you too. So this is the baseline and the conversion line of the Ichimoku. So essentially, there's still so much confluence of support below that even if it did go lower throughout this month, I still think it would just turn into a wick and probably close back above. So I'm not worried about that at all. And what we're seeing right now in the past 4 months is way, way, way different than what we saw over here, right? We saw over here this huge 24% down monthly candle. We saw it just got rejected by everything, even the baseline, the conversion line, the bottom of the cloud, the 50. And here, what did price get rejected off of? It only got rejected off of the 50% and the 50-month moving average. And the month is still not even over yet, so it's still battling this 382 and it's battling the 213 down here. So what we're seeing these past 4 months, because it's above the baseline and the conversion line and it's in the cloud, is a way, way, way different scenario than what we've seen here, than what we've seen here, than what we've seen anywhere before, because price is actually on top of monthly support levels. We haven't really seen that before. Like even right here, it was on top of these support levels, but it was basically battling that baseline, and that wasn't good enough, right? Right here, it was underneath everything, so it went down. Right here, underneath a lot of things, so it went down. Here, still, right? You can see the difference, and I think this is what's important to notice is this is a change of bearishness to bullishness, what we're seeing. Let me just zoom out a little bit. It's a change from something that was bearish for a long time, and now that price for the past 4 months has been above major support levels. This is something that is starting to be a bullish development that we have never seen before since the all-time high, right? So this is a clear distinction of why I'm so bullish and why I think that these dips don't even matter that much, whether it's 220, whether it's 230, whether it's 213. It's basically, when you look at it, it's all this zone right here. Like from 230 down to 213, it looks like nothing on a monthly chart, right? It's just this zone right here. And people freak out. They think it's like the end of the world, but it is something that is developing very, very, very bullish. I think people need to be aware of that and not worry so much, because what it's trying to do, and we'll wait for another 20 days for the end of this month, but what it's really trying to do is build a base on top of these support levels month after month after month after month in order to eventually explode higher to the 258, the 295, the 300s, and above. And here's a quick look of that GAN that I shared on X yesterday. Yesterday, that support level did hold in the 230s, but then today it just sliced right through it. But again, this is another example of how bullish this chart actually is. So we can see that price is flipping this arc to a support. It's already on top of it. I thought this would hold for sure, but I was wrong, right? It didn't hold and it just sliced right through it, but that's okay. It's all part of the process of developing a more bullish market structure. So what we can see is, could it come back down to that 207 zone? Yes, because guess what's there? The monthly baseline, the monthly conversion line, the weekly 100-week moving average, the weekly 50-week moving average, right? All of those are in that zone. So I'll just put on those moving averages back on right there so you can see it, right? It's exactly at that arc. So even if it did lose current price and did go down to the 207, 206, 205 zone, is it the end of the world? To me, no, it's not. right? And I think what's important is how this month closes too. If it closes back above 213, 221, all of that stuff again, then we're good to go. But in my opinion, what we're just seeing is the beginning stages of something bullish because everything is upward sloping together, and it's on top of an arc, and it is trying to build a base at higher levels, right? So it's just a slow process. And like I said, why is this one lagging? Well, look, it's making a series of lower highs, lower high, lower high, lower high, lower high, lower high, and this is still a lower high from here. And this is still a lower high from here because we count the bodies of the candle, not the wicks, right? There was no body of the candle closing above this wick. There was no body of the candle closing above this wick or even this wick. So technically, this market structure still has not officially flipped bullish, even though everything is in the development of flipping more bullish. Technically speaking, it has not. So this is why we're still seeing some major downward pressure, right? Even more so than I think is going to happen sometimes, but it's still just part of the process, right? There's lots of things in the development that are going to continue higher and higher. And one last chart I want to show you is the angles chart that I haven't shown in a while. And it's this one right here, right? What sits right down there? Well, that it sits around 200, right? So would that be worst case scenario if price did go down there? Possibly, but I don't really expect that. But I always say I don't expect it, and then something happens, right? So with Tesla, hitting some support levels, even wicking through them is always possible because it's a very volatile stock. But for this stock to really go into launch mode, it really needs to start making a higher high. And once it starts making a higher high, then a lot of shorts will have to cover. A lot of people will get left behind because they never buy the bottom, they never buy support zones. They always think it's going to go lower or lower or lower or lower. And then when that time comes, they just miss out. So my advice to you guys, going back to this chart here on the monthly chart, just focus on the high time frame because the high time frame is telling the story, right? It's telling the story for the past 5 months, sorry, 4 months in a row that it's building a base on a higher level. And if that changes, I will let you guys know. But until then, this is a bullish setup. It's not completely bullish yet because it hasn't made a higher high, but this is a bullish formation change where something that used to look pretty ugly in the past is now looking more and more beautiful with all these monthly candles being on top of these support levels. So things are looking better and better. It's just going to take more patience, but that's okay because it's just more time to accumulate before price really goes higher. And next we got Palantir. Palantir going to start on this Fibonacci from the previous all-time high to the low. We can see that it did close the week back above the 886. Now, this whole zone, the closer it gets to 45, the more resistance it's going to hit. So it's getting really, really kind of extended to when you even put on the weekly Ichimoku, those are down in like the 36 zone. So what we can really see is, yes, this is really bullish, but it's getting a little bit extended and it's getting into a resistance zone. So either you can be greedy and just try to see if it's going to break, or maybe you're in it for the long run like I am, and I don't really care if it comes back down to 40 or even goes a little bit lower, right, to retest those levels, because I think ultimately if a stock gets above the 886 and the 786, then almost all the time it breaks into all-time highs and beyond. So for me, the volatility doesn't matter, but if somebody is just trading in and out of this, then yeah, this is the take profit zone because this is really getting close to the previous all-time high. And usually the previous all-time high is some sort of resistance. So just got to be careful with that. And the other thing I'm going to show is the log scale GAN here. And this log scale GAN did had a fabulous weekly candle close, right? It did break above that top arc, confirming everything is really in a really positive trend. So where does that arc sit next week? It sits right where that 886 is, around 40.40. So that 886 that I showed you before was at 40.50. So this is basically around the same price. So could price come back down there and back test it? Absolutely, right? So if you're willing to risk $3 or $4 or $5, then that's fine. But if not, then profits could be taken here. And then you can just relax a little bit. And then if price does dip more, then you can re-enter, right? It's just a matter of perspective. But for me, I'm in it for the long run. I think it's gonna just keep building along this angle right here, and then maybe eventually by the year or next year, maybe September of 2025, it could be $100 stock. So I can see very, very positive developments with this stock, and then I think even though it is approaching resistance, it's only going to be temporary, and I think it's going to go much, much higher.